This is Cece. Welcome to the Orbit. It is Tuesday, March 12th. We've got stocks higher. We're looking at SPX at about 5140, and that is up from yesterday where we saw the market dip down below 5100. Of course, today is the CPI number was this morning. We're about a half an hour into the trading day right now. The CPI came out about an hour before the markets opened. And it was about in line with expectations, and that was gave stocks a little bit of a relief as they had sold off into it for the most part. And we are, as you can see, we're about halfway back, filling that gap from the high from the other day to the lows we saw yesterday. And as far as the move itself, we're up about a half a percentage point, actually less than the expected move for today, and that was because of the CPI. Options were pricing closer to a 0.8 or somewhere around a 0.8% expected move. And that was putting a little bit more. That was the signs of some volatility creeping into the market over the last week. The market has not, options wise, the market has not been pricing CPI and FOMC and those kinds of days as heavily as far as IV and high IV as it did in the past. But the last couple, they've sort of, the market's gotten a little bit more nervous than it has in the past. And that is because everybody's trying to read when the Fed will actually lower rates. And I think the rally today is basically that nothing has really changed. And the Fed will lower rates at the beginning of the summer. So let's go to the expected moves for the rest of the day. Now, of course, we still actually got almost a half a percent expected move for the balance of the day. You can see what that puts us at, which is about 5120 to the downside and 5170 to the upside. You can see where that is on that 1 week chart. It is inside that high and inside that low. It is kind of interesting where we are if you come back to this level right here before this gap lower from a couple of days ago. We were right at that level, and again, here we are 5145. We're looking at 5150, and then there would be some obvious levels above and below. Going 50 points out, and that would take you to really to the end of the week. You start seeing those in the expected move levels, and say for the rest of the week, you could kind of eye these levels and maybe go a little bit outside of those levels. And that's the expected move is putting you right at this level and this level. Another reason why the market is higher today is this move in Oracle. Oracle reported last night. Let's check in to see. Options were pricing about an 8.5% move. We've got it up more than that. It's up 10%, almost 10.5%. So it is moving beyond that expected move. What's interesting, it was up even more. It was up about 14%. I think I saw it late yesterday after hours. So it is backing in a little bit. Now, what else is interesting here is this 126 level, this 126, 127. Look at that chart, right? So that is going back to these prior highs, which it really did twice at that 127 level. So this is, it's a big move higher that is right up against that those prior highs. It's a good chance to check in on the Qs, and let's see what the Qs are doing today. So we've got the Qs up about 0.6%, so a little bit more than SPX. But not by much. You can see where it is on the 1 week chart. It is a bit lower. It has not gotten back to, it had a little bit of a steeper sell off, and it has not gotten back to about that 50% gap fill level. So it still has more room to run higher to the upside on as an expected move in options as far as like a recent range, and it's a little tighter to that low, to that recent, say 2 week low, to potentially fail and go lower. And so that's something to keep an eye on. As far as the expected move the rest of the day, you still got a 1% expected move for the rest of the day. So options prices have not really compressed since the CPI. I think there's still a little bit of nervousness in traders. And that's what we were talking about yesterday on the Orbit. There is, we have expiration this Friday. And it is something to be aware of is if we got a kind of inline PPI to follow up the CPI, do traders just sort of reset and go back and say, all right, everything's fine, and this volatility and this nervousness that sort of crept into the market the last week is over? Or is this kind of a new gamma regime and a new vol regime? And are we going to see people, actually buying puts or maybe even reaching for upside calls and momentum trading the market at least, if not outright nervousness to the downside? So we will see. We don't know yet. And it might be resolved later this afternoon. It might take a couple of days this week, or we could go into options expiration. Today we've got about 23 vol, and then you can see the rest of the week is really around 15, 14, 13 vol, which is a little bit higher than what we've been seeing. We've been seeing some of those short duration IVs as low as 10, 9, 11. So it is still a little bit higher, but it is down a little bit since the CPI printed. But today, that's still a pretty healthy expected move for the rest of the day of around 0.5%.